Ladies and gentlemen, good morning. Welcome to the conference that sums up the outcomes of Q3 and 9 months in 2016. We are meeting as every quarter at the seat of PGE in Warsaw. Our speakers for today, or our hosts for today for that matter, are the CEO Henryk Waranowski, CEO Emil Wojtowicz, President of the Management Board, and Deputy CFO. Well, first we will present our financial outcomes, and then we'll move on to the questions. Questions from the room as well as the ones from our analysts and shareholders who are watching us on the internet. You can ask questions directly to my email or through the form. You can ask them in English as well. So that's my introduction, and now over to the CEO. Thank you very much. Ladies and gentlemen, welcome everyone. We will try to be brief and to the point, summing up what's happened in Q3 this year. First of all, let me point out that this is yet another quarter where we had the pressure of the market, and it had impact on our outcomes. Quarterly EBITDA of 1.6 billion zloty is still one of the highest in Poland. Let me draw attention to the highest operating cash flow, 1.9 billion zloty. It was slightly higher than CAPEX and investment funds. Recently, we've had the situation in 2014. As regards profits, 700 million zloty of adjusted net profit translates to 36 groszy per share. I am happy that the completed Bełchatów modernization translates to production of electrical energy, which was 13.6 terawatt-hours and was only 3% lower year-on-year, based on the production of which was based on lignite. Distribution volume 8.5 terawatt-hours and 10.5 terawatt-hours sales to final customers. As regards operating issues, the most important issue was the complete closure of modernization of the next unit in Bełchatów. Now, regulatory issues. There is a new draft of the capacity market, and as regards corporate dimension, the most important was the updating of our strategy. Its implementation will provide us efficiency to compete on the current market, and it will also give us flexibility and will allow us to adjust to dynamic changes on the market. The starting point is a modern phase of conventional energy, and we can create it when we focus on modern technologies. Now, to sum up the most important issues in our strategy that was announced in September, the key to further development and implementation of investments is efficient management of resources at hand. We will focus on limiting controlled costs to make sure that in 2020 their level is lower than the one we have today by 500 million zloty. So this will allow us to save 3.5 billion zlotys. Another 500 million zloty will be generated from optimization of our activities related to our assets, their profitability and significance to the national power system. And this will allow us to avoid unjustified costs. I do believe that as regards waste management, it will be profitable not only to us but also to the environment. We are well aware of the fact that we need to focus on the improvement of the functioning of the whole organization. Only then can we efficiently realize our investments. Well, of course, our partners will be involved in our flagship projects in Opole and Turów. Let us not forget that for the future of our business, it will be necessary to make modernizations, to adjust them to planned BAT conclusions. We treat them as challenge, which will allow us to limit the environmental impact of PGE, and we will also carry out overhauls to improve the efficiency of our assets. We keep investing in electrical energy distribution, improving quality indicators. We keep looking at market regulations, and we are flexible about our future investments in the group. We have the possibilities of development in the area of offshore wind energy, nuclear energy, or modern conventional energy, which uses such technologies of carbon degasification. We do not forget about renewable energies. Our objective is to be accountable for 25% of green energy by 2030. A modern energy group in the current realities has to have a broader outlook and generate benefits also in the area of energy efficiency, also when developing and commercializing innovative technologies. And this has to go hand in hand with our focus on customer expectations and adjustment of our offer to their expectations. It is only then that we can ensure effective transformation of our group. Now, market environment. Here it's still difficult to find stable reference points. It's not a transitional condition, rather a certain rule. That's why flexibility is so important. Solid increase of GDP, around 3%, is very important for electrical energy. In the first 9 months, consumption of energy was 120 terawatt hours. One can expect that this is going to be another rule, namely the fall of energy consumption on a national scale. We can see some stability in the prices of contracts for next year, and now the average price is 159 zloty. It is the second time this year that we've seen missing capacities which had impact on increases in prices. And this is not positive for consumers. So that's why I do hope that regulations of the energy market will ensure stability of production revenues, which will allow us to better plan and realize investments which are necessary from point of view of consumers. We can move on to summing up regulatory environment and the capacity market. We are closely looking at the processes of the development of capacity market. We are happy that our remarks have been reflected in the new draft. After the British experiences, we have the possibility now of using baskets which allow us to stimulate new investments and make modernizations. Since there are basic actions in the last quarter this year, the deadline for delivering energy was extended by 5 years ahead. Normalizing the method of remunerating production units will ensure more effective auctions. As you will know, yesterday the European Commission approved the French model of the capacity market. We hope that similar solutions will be reflected in the Polish draft. Last quarter, the sector saw the proposal of the operator concerning the instruction for operation of the transfer system. And This issue contributed to postponement of changes to 2018. Along with the new renewable energies law, we have the new certificates, the obligation to redeem the new certificates, the blue certificate. And it's quite important from business point of view because lack of market certificates results in the fact that they are sold at the price of 300 zloty. And at the end of this year, we can expect the first auctions in the first system that supports renewable energy sources, agricultural biogas. And the final renewable energy sources obligation will be 16%. 15.4% will be allocated to green certificates, 0.6% to blue certificates. We are continuing our broad investment program. Now, this is the slide about our investments, and I'd like to bring you up to date with our projects, both the ones related to development as well as ones related to overhauls. Strategic projects. We're working on the new units in Opole. According to the timeline, we've already completed 60% of works. We've completed the most important parameters of the investment. At the beginning of November, the first element of transformer for Unit 5 was delivered. Advancement or progress of work in Turów is more than 9%. We are laying down foundations for the most important facilities. In Polish and foreign factories, the units are being manufactured. Our inspectors take place in quality and acceptance tests. Another unit, a gas and steam unit in Gorzów, is now being tested. We are planning to run it in December. We are continuing our overhaul activities. Comprehensive modernization of power plant in Bełchatów has been completed. In Q3, it's been working to its full capacities. So we have the highest production volumes of this year. And modernization project in Turów for units 1 to 3 has accelerated. In December, we will deliver the last project. Moving on to Pomorzany power plant, we can say that, well, as we informed during the last conference about the completion of tender for desulfurization and denitrification installation, we can inform you that we've already signed a set of contracts for both installations. Thanks to those investments, the boilers of Pomorzany power plant will meet emission standards according to IED directive and future BAT BREF conclusions. Now, distribution. PGE Distribution Warsaw is responsible for the development of a new cable line, Łomianki-Czosnków section. And the Czosnów area is located along E7 route, and that's why there is a lot of capacity demand. PGE Dystrybucja has started to develop a new unit in Czosnów. In October, we signed a contract with the contractor. The estimated value of all planned expenses in this node is 200 million zlotys. From August this year, in Redkinia in Łódź and in Augustów and around it, in more than 50,000 households, we are installing remote meters. The objective is to increase efficiency and safety of energy networks, making it possible to issue bills based on real usage and quicker failure identification. This project is a pilot one and will last till the end of this year. As regards expenses incurred over the last 9 months in distribution, the biggest expenses related to connection for new clients. So we have connected more than 170 megawatt renewable installations. Now let me give the floor to CEO Wojtowicz, who will talk to you about financial outcomes of the group. Thank you very much, ladies and gentlemen. Good morning. Indeed, as the CEO mentioned, Q3 of this year was yet another one when PGE and the whole sector as such was under certain pressure. Our EBITDA shrank by some 400 million zloty in quarter-on-quarter, and the same applies to net profit. The areas where we can see those falls are present in every segment. The higher the segment, the more visible the impact is. You can see this in particular in conventional energy, where the fall accounted for 1/5. On the other end of the scale, where the falls were smallest, we have distribution, where the fall quarter-on-quarter was around 10%. You will see some more details on this slide that is comparing EBITDA in Q3 2015 and EBITDA for Q3 in 2016. Well, like I said, the biggest impact happened in conventional energy. 113 million more was paid for CO2. Well, it results from the fact that this year we have a smaller allocation of free emission rights. So this means a bigger gap. According to our risk management policy, we are securing the CO2 costs in the periods when we are signing contracts. So possible fall of prices of emission rights will be seen in the next quarters. And the next important element in terms of value is the bituminous coal price. So this is the second fuel. We will see this later on as well. This quarter, we use less bituminous coal and more lignite, which was also related to the fact that we completed overhauls in Bełchatów. So that's why we have lower use and lower costs of hard coal. Now, as regards volume, the fall of total volume reduced EBITDA by some 70 million, and it's another factor that had impact on conventional energy. And another thing that I like to mention is capitalization of extraction costs. We have normal levels of capitalization here. Last year they were higher, so we had less in costs. And because of this mode of work, because we had another measure. So this is just a bookkeeping value. This year we are including these amounts in costs. Last year we were including them in assets. So I was talking about conventional energy right now. Our second important segment, distribution, shows a shrinking EBITDA. The main reason behind this is a shrinking tariff that we received for this year. We can see that the volume of energy distributed is higher year on year and higher than planned. So this is the factor that levels out shrinking distribution outcomes. Now, let me comment on what I've mentioned before. All in all, we produced less energy. However, the structure has changed. This means that we are using lignite. And I remember when we met last time, I announced together with President Wasiłek that the time of overhauls is over. Now it's time of work. And we can see this on the slides and in our outcomes. So lignite, plus 3%, hard coal, 20%, which is also caused by the fact that hard coal was higher because it slightly replaced lignite. But our power plants, which use hard coal, are less loaded by the operator. In this slide, you will see an increase in wind energy, but this increase is related to the fact that new farms have been put to use at the end of the year. It's not because of the fact that the atmospheric conditions were positive. Next slide. Several operating indicators. As you can see, we have an increase in Q3. Our SADI and SAFI indicators for both types of coal. So this is another proof of the fact that the overhauls in Behatów have been completed. Load factor increased for bituminous coal. These are the power plants which are of key importance, which are core for PGE, because we have lower cost of energy there. So we use lignite there. Hard coal, we have fall of this indicator, load factor. So and that's the data for Opole and Dolna Odra. Wind assets. As a similar indicator, similar level, lower use because atmospheric conditions were worse in this quarter. Distribution. We can see some improvement of network losses. After June, SAIDI and SAIFI indicators slightly exceeded the thresholds set by the regulator because of the storms that were happening in June. Thanks to the fact that these events did not happen later on, we are coming back to the safe levels which are expected by us. Now, investments. We spent several percent less than last year, and the main reason was a decrease in investments in renewable energies. We are only making expenses for maintenance of assets that we have at hand, and possibly we are waiting for auctions that will be our guideline for further planning. The biggest investments have been realized in conventional energy. Almost 50% of investments were related to Opole, our core investments, mentioned by the CEO. He said that it was all according to the plan. Conventional energy as a whole accounts for 75% of our expenses. So thanks to this, our assets will be efficient, well organized, and adjusted to the BAT conclusions. Distribution. Some 20% of our expenses from operating point of view, and the investment plan is being implemented. So that's it in terms of the background. Now just a few words about what will happen in the future. What are the perspectives for next year? Now, as regards conventional energy, one of important changes involves the fact that we are not under this stock exchange obligo. So this means that we will implement a new model of trading in the group. Probably we will have less energy going to the stock exchange and more will go directly to customers. We expect that the price pressure will still be maintained to a certain extent, but it will have an outcome of a few zloty. Another important change lack of revenues from long-term contracts. Last year it was some 500 million plus 100 million of long-term contracts related to court decisions, cases which were won against the regulator. Another important issue for conventional energy is as follows. Our CO2 gap will still increase, and we are hoping that the cost of the gap will be decreased because of lower CO2 prices, which we are contracting at present. Considering a lower allocation of emission trading rights and higher production, we think that the gap of rights will be at the level of 6 million tons on an annual level. Now, as regards distribution, we don't yet know the exact tariff. We don't know what the final tariff is going to be like next year. We hope that we will be able to agree a reasonable tariff with the regulator that will allow us to continue investments in this segment, which is very important both for us as well as for our customers. As mentioned by the CEO, one of the elements of our strategy involves the search for efficiencies, and we will keep searching in every segment. We are looking for the biggest savings in the biggest segments, of course, and the forecast for this year, for 2016, show us that we can expect certain savings at the level of 200 million zloty. Thank you very much for your attention. And we are happy to take your questions now. Yes, thank you very much for the presentation. So I will give the floor to you, ladies and gentlemen. So please ask your questions to the mic to make sure our viewers on the internet can hear them as well. The floor is yours. In Polish. Paweł Pucharski, BZWBK. Now, the first questions concern slide 14 that you have just discussed. In particular, renewable energy segment, outlook for 2017. Well, I can see that the reasons, I can see some reasons behind the fall in renewable energies, but I don't see any information about this tax, the new tax. And the question is this: is there a chance that you will not be paying this tax, or you're not making provisions for it in your plans? And the question number 2 also concerns RES. A week ago, Enea terminated its contracts, and I wanted to make sure what is the volume of megawatts in wind in your case, and what would be the impact on EBITDA, if any. Well, the first question about the tax. Indeed, it's an element that will have impact on our results. Right now, we are analyzing farm by farm, community by community, municipality by municipality. What are the outcomes? What we should do to make the outcomes as little painful as possible. So we don't have the final conclusions in terms of figures. And as regards your second question about Enea. Enea terminated contracts both with regard to renewable energy as well as conventional energy. Our lawyers and operating services have been analyzing whether indeed they had the right to do so, and we will respond respectively. So until we prepare the response, we will not be quoting the values. All in all, 3 million terawatt hours. So all in all, until the end of the term of those contracts, Enea should buy, all in all, conventional energy and renewable energy, some 3 terawatt hours of energy. Sorry, certificates. What was the period? Those 3 terawatt hours for 6 months or for 15 years? Until 2021. So that's the volume, well, 6 years, which is risky. Okay. One more question, if I may. And to follow up on the other question, RES, renewable energy sources, has less share in this volume, because mainly a vast majority of this volume is biomass boiler in Szczecin, which is in conventional energy segment. Another question, Turów. Recently, you've had some shortage there, and I wanted to find out whether the negative impact can be seen in EBITDA in this quarter. Do you have some final estimates how much it's going to cost? And was it partly visible in Q3 or everything will be visible in Q4? The cost estimates are still ongoing. As soon as we finish stock taking, it's hard to talk about the scale of costs. And I guess we'll be informing about this when we meet in Q4. Well, following up. It's what happened there was sort of a slide or slip, and we can see some minor impact this quarter. 15.5 million write-off. That's a pure net bookkeeping value of what was slipped, and the outcomes will be twofold. In Q4, The results will reflect the fact that some production was moved to the power plant with higher costs. That's one impact. And the other impact, which you will see in the long term, is that the machine will have to be rebuilt, the one that was destroyed. That's the other outcome. Turów is working to its full capacities from the end of October. So according to the plan, and it works in the same way as before the event. And let me draw attention to how quickly Turów's available capacities were restored in spite of the big scale of the incident. From the 1st November, we announced that we would bring back full capacity in November, and we managed to do that several days earlier. Any other questions? One more question. Slide 5, you are writing about a macroeconomic environment. I'm looking at Q3 this year, and I can see domestic electricity consumption growth, which looks quite poorly. Is it compared to the whole year or to the same period last year? Can you explain why in Q3 the increase in domestic electricity consumption growth was only 0.7%? Were there some one-off events? It's a market trend, so it's not like something's happened with us. It's based on our observations. It's not anything that would apply to PGE only. And would you make a comment concerning the general market? Because comparison of 9-month growth, 2%, to 0.7% in Q3 shows that there is quite a significant change. Do you know of anything that happened in the national economy that had impact on it? Well, we know of no such event on a national scale, and our analysts haven't identified any such incident. This fall, we think, is related to the weather, as well as with increase in the awareness in the general public as regards energy efficiency. Everyone is has been trying to make savings and manage energy in a more efficient way. As regards the area of our distribution, the increase is higher than on a national scale. Robert Majchaj, Tombank. I'd like to ask for your comment to the new changes on the capacity market. How do you perceive this, and what is the deadline for the changes? Do you really believe that the auction will take place in 2017 with the first delivery for 2022? What sort of opportunities do you see here for your group? Maybe the newly designed capacities in Szczecin and in Police will participate in the new capacities. And the second question concerning electrical energy prices for next year. You mentioned it would be slightly lower. What percentage of energy have you already sold for next year? And if at the end of the year the price is higher, the market environment is such that the energy prices are growing in Poland, Turów shutdown also had impact. So do you think the impact on 2017 can improve? If so, to what extent? We are not quoting such data. How much energy has been sold? As regards the price, whether it will increase or decrease vis-à-vis our forecasts, well, indeed, the prices on other markets have been growing slightly faster, or let me rephrase. It's slightly leveling out, but we cannot see any permanent tendency or trend, so we don't want to build our plans on some very optimistic scenario concerning prices. Well, it's not really a question for us. We'd like the capacity market to be implemented as soon as possible. We are carrying out analyses which have shown us that it will have a positive impact on our production capacities, production units. And as to the scale of the positive impact, we need to wait for the regulations to be fully implemented. The notification process will take a while, I think, but based on the example of France, we can see that the European Union does see the need to have such a regulation of the capacity market in different countries. It's called differently in different countries, but the mechanisms behind it are similar. And as regards coal prices, recently they have been growing on the global market. Do you see an impact for next year, that you will be paying more for hard coal next year? If so, then how much more? Or do you think these increases are temporary and it will have no reflection in long-term contracts next year? Or which scope of contracts could be changed vis-à-vis prices on the spot market? Our main supplier of brown coal is of hard coal is PGG, and we have a contract with them, which is a long-term contract, and it provides for a certain price formula which depends on numerous factors. So we investigate different variables from this formula, and based on this, we are expecting several % fall in prices next year. Krzysztof Kubiszewski, Trikon. Based on what the Minister of Energy said, we can conclude, actually, he said it as a fact, that price of coal obtained by PGG last month was 238 zloty per ton, vis-à-vis 209 in May. I understand the calorie city hasn't changed, which would indicate that the coal sold by PGG is now more expensive. And I've been wondering, how come you expect a fall in coal prices next year? Well, this formula contains several factors. One of them involves ARA, but also others. We feel like we are on the safe side of the force. We would be worried if others were paying more for coal. The formula is part of the contract, so it's confidential. So sorry, we can't publish it. May compared to September and October, well, they are different months and different coal. Winter season provides us with a different coal, with different cost per ton. So there is always a saddle in unit price of coal. We are talking about price per blend. And in winter, coal has a higher quality and thus has a higher unit price. And this is the trend which we've been observing for many years. I'm not talking about scale, that it explains the difference 38 versus vis-a-vis 39, but this is the trend which we've seen in the past as well. One more question about energy price. When you sell it for 2018, do you see that the price is higher than in 2017? Well, we quote outlook a year ahead. We've been analyzing 2018 very carefully. It's something that we, as the current management, will have impact on. Is there any difference between bilateral contracts concluded for energy after the obligo has ended vis-à-vis what we see on the stock exchange? Is the price lower, higher, or the same there, talking about the future? We are always quoting average price, not breaking it down into types of contracts. So let me repeat that we are not disclosing prices for types of contracts. Now, just an extra comment on my part. The volume of the commodity stock exchange is lower for various reasons, and it's not the channel that we've waived. Surely it will be still setting the trends on the market. It's hard to expect for a single place of trading, which has a big share in deliveries. It's hard for it not to reflect the trend. Probably bilateral contracts will be profiled for concrete customers, so they can be both above and below the trend, depending on the customer profile and delivery profile. So in our opinion, it does reflect the trend. Now a different point of view, because you now have a share in PGG. Now, Germany is the biggest consumer of hard coal in Europe. Considering the current price, ARA per gigajoule, it looks like Polish power plants are able to deliver coal profitably to Germany. Is it possible for PGG? I understand that Germans are not obliged to buy coal in port, so would it be a solution for PGG in terms of volume? What's the question? Well, the question was whether PGG considers selling coal to Germany and if it's possible. It's a question to PGG, isn't it? Well, I thought that as an owner, partial owner, well, yes, partial owner, please do not ask us about plans of PGG. And we hope that there is someone who's asking himself the same question at PGG? I think it's easy to find this answer at PGG, and the answer may be quite interesting. But we are not going to speak for the company that we only control to a limited extent. Well, the problem is to how to ask a question to PGG. But anyway, thank you. Well, slowly but surely, we've been closing to an end. Thank you very much, and thank you so much for coming, for your active participation. Thank you very much to the management board, and we invite you to the next conference, which will take place after the publication of annual results. We will publish the date soon. Traditionally, it's going to happen around February and March. Thank you again, and see you.